And if you want to know where performance is coming from in terms of earnings growth, three sectors are driving earnings growth: financials, materials, and technology, while energy, healthcare, and comm services are actually negative year over year.
We begin with the backbone of equity markets, corporate earnings. According to Lee, the first quarter earnings season is off to an exceptionally strong start. Even though we're only about 10% into reporting, an impressive 92% of companies are beating expectations, with an average earnings surprise of 11%. That's not just good, it's historically strong. This week alone, nearly 100 companies in the S&P 500 are reporting, making it one of the most critical stretches of the season. Major names like Tesla are in focus, often acting as sentiment drivers for broader markets. But what's more important is where this growth is coming from. Sector leadership. Leading sectors: financials, materials, technology. Lagging sectors: energy, healthcare, communication services. This tells us something important. The market is leaning towards cyclical and growth-oriented sectors, signaling confidence in economic resilience, even amid uncertainty.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So let's direct our attention to macro. And there's a couple things I want to highlight this week. The first is that we're in the midst of first quarter earnings season, and 93 companies are going to report this week in the S&P 500. So it's a pretty heavy week, and it's going to include both granny shots, which are marked here in red, and junior grannies, which are marked here in blue. And notably, companies like Tesla report this week. Now, overall, it's been a good earnings season. We're only 10% into earnings season, but companies are beating by 92%. I mean, that's a big number. 92% are beating, and an 11% overall surprise. Now, earnings season really heats up over this week and the next 2 weeks. And if you want to know where performance is coming from in terms of earnings growth, three sectors are driving earnings growth: financials, materials, and technology, while energy, healthcare, and comm services are actually negative year over year. The other thing I want to talk about is the new Fed. The confirmation process is starting this week for Kevin Warsh. And let's get a timeline for what it looked like in the past from that point on to when he'll actually be confirmed. Well, typically, it's 7 days later when the committee will hold its vote. Okay, so that's 7 days from now or next week sometime. And then, as you can see, the Senate will have a floor confirmation vote. And in Greenspan's case, that came only 6 days later. But for the Bernanke, Yellen, and Powell, that was more like 50 to 70 days. So I think that's the timeline to think about, which means we could have a new Fed chair in place sometime between June and July 2026. Now, recall what I've pointed out in the past. The market always tests a new Fed. This is a table from Barclays and what happened in the first year of a new Fed chair. But let's mark periods of 10% or worse declines. 10 of 13 Fed chairs had a drawdown of more than 10% in the first year. So I think it's more the rule than the exception that we'll get a big drawdown. Now, what does it mean for markets? Well, we've had a V-shaped recovery from the war lows, but that's more or less the rule, not the exception, because 9 of 13 bottoms have been V-shaped. So that takes us to our roadmap for the year. We originally said that the market could get towards 7,300, and it looks like we're on a path towards that. We're well over 7,000. And then we'll have a decline that will feel like a bear market. Perhaps it's because of the market testing a new Fed chair. But keep in mind, a lot of the markets already had a drawdown, and the Mag 7, crypto, and software. And then I think a rally follows because fundamentals are strengthening, maybe one of the strongest rallies we'll see in our lifetime. So just a reminder, just don't time the market, even if you're tempted to. Now let's look at individual granny stock performance. The top 5 performers in the past week were Robinhood, MicroStrategy, Cadence, Design Systems, Tesla, and Palantir. Now, Robinhood got a catalyst. Crypto's rebounding here. And, Tesla continues to do well, but they're reporting this week. The bottom 5 performers were basically defensive stocks and Netflix on its results. On the mid cap side, the top 5 performers are listed here. Basically, it's kind of just high beta and risk on. And there was some quantum here and some positive developments around Bloom. But look at the bottom 5 performers here. And they've been solar and energy names, which have continued to kind of weaken. There is some earnings this week from Belmont. As for themes, global labor shortage remains one of the top performing themes, followed by millennials and seasonality.
Shifting to crypto, a crucial moment for Bitcoin. Bitcoin recently tested its 21-week exponential moving average, EMA, a key level often associated with the boundary between bull and bear phases. Interestingly, price action came within just $50 of this level, showing how precise and significant this resistance is. Is this a rejection? Not so fast. Cautions against jumping to conclusions. Historically, Bitcoin often tests resistance, pulls back, then retests and breaks through later. Examples from 2023 and 2024 show that initial rejection doesn't mean the rally is over.
So I guess in this case, Bitcoin did go up to the bear market resistance band. In fact, if you zoom in, this wick was essentially right to the 21-week EMA, right? You can see that 21-week EMA right there was 78,415, and Bitcoin went to 78,361. So, I mean, came within about $50 to $60 of the 21-week EMA. Now, where things get tricky is, just because this was just a wick up and now that we're below it, it doesn't mean that this is an outright rejection just yet. There are cases in the past where you'll wick up to it. Like look over here in 2024, you're wick up to it, get rejected, and then you'll go up above it the following week. And then you got rejected again, then when we eventually went above it. So there are times, right, where you'll and even 2023 is a good example where he wicked up to it, came back down, and then eventually rallied back above it. So I don't want to imply that, just because we're a couple thousand or a few $1,000s off of that local high, that the rejection is already in. Especially considering that in midterm years, after you have sort of a low in February and then another low in April, usually the market can stay somewhat strong for at least a few weeks after the April low. So if you look at, 2014, we had a low in February, we had sort of a lower low over here in April, and then the market actually stayed strong until June. Now, I'm not expecting it to stay strong that long. I mean, it could. I'm not trying to say it can't. But the reason I don't think it'll stay strong that long is because when it had that longer rally, the low in April was a lower low instead of a higher low. In 2018, when we had a low in February and then a low in April, the low in April was a higher low, kind of like what we just had. And then when we had the higher low, the strength by Bitcoin only lasted until the end of April. And you can see that back then, Bitcoin went into the bull market support band, kind of came back down, went up, but it ultimately did get rejected, but it wasn't obvious that it was rejected until May arrived. Now, remember, the next Fed meeting by the Federal Reserve is until April 29th. And that is also, I think, around the time, maybe in the same day as the Bank of Japan. I'm not 100% sure, but I think it's that same day. There's a chance that the Bank of Japan may raise rates, but we'll see. So that could be the narrative that occurs, is that perhaps we rally into or stay strong into that event. But even if we do, it doesn't mean that we get durably beyond the bull market support band. If we do get above it, the main area that I think you would sort of turn your attention towards is the 200-day, right? Because historically, if you just simply look at like the 200-day moving average in bear markets for Bitcoin, you'll see that in bear markets, we tend to find resistance at it. So in April of 2022 and in May of 2018 and in 2014, right? In June of 2014. So the danger with extrapolating is you have extrapolated this June, May, April, the next one would have made sense to say March, but then of course it did not happen in March. So the 200-day moving average would be the sort of the major line in the sand if Bitcoin is able to get above the bear market resistance band. Even if it does, I don't think it would be a sustained rally at this point in the midterm year. That would be my guess. And I mean, I don't know exactly how high this thing could go if the top is not in. You know, you could argue that if Bitcoin is able to stay bullish till the end of April and it just kind of like comes back down, maybe goes back up, like that could correspond to perhaps the 200-day moving average reaching that level, and then it could sell up from there. But you know, I'm not against either the idea of you know, getting rejected up in this region, coming back down, and then eventually sort of retesting these lows. The main bull case is that if this truly is just sort of like the 2019 thing that I pointed out a long time ago, then you just overlay this bear market with the one in 2019, you could argue, all right, well, maybe the rally lasts a little bit longer. But even in this case, it would still only imply maybe another month or so rally, kind of maybe going into early June, right? So if this chart is right, then you wouldn't expect the next lower high or the next top to be in until June, early June. But the reason why I don't necessarily buy that narrative is because I think there's a good chance that the digestion phase of 2019, the length of it kind of matched the actual bull market. And I just don't think this is a long enough digestion phase to match the length of this bull market. I just don't. And especially with it lining up with the midterm year, if you look at the year-to-date ROI of Bitcoin in 2026 and compare it to the average of prior midterm years and then overlay one standard deviation on that average, we're kind of at that higher end, right? So I'm not saying Bitcoin can't stay elevated. I mean, you can see on average that one standard deviation shows you that we kind of hovered at these levels. This was mainly back in 2022, right? In 2022, Bitcoin got to these levels and kind of held it for a week or two. And then as May rolled around, we then had sort of another drop. And so I just want people to be aware of this chart. I'm not saying that it has to play out like this, but I think there's a good chance that this will continue to provide somewhat of a roadmap, at least in the short term. Okay, I'm not asking you to follow it through the end of the year, but I think it could provide somewhat of a roadmap in the short term as to how, mainly where the windows of weakness occur. And usually in midterm years, the main area of weakness is February and April and then June. There is a case where June was not weak, and that was back in 2014, where we ended up finding a top in June. But that was also after a lower low in April, not a higher low. In this case, we had a higher low, kind of like in 2018. And back then, when we had the higher low, the top occurred in like sort of late April, and then we swept it in early May.
If there's one tactical takeaway, it's this. Markets tend to weaken during specific windows: February, April, June. Understanding this rhythm can help investors anticipate volatility rather than react emotionally to it.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.